Good morning, and may I, on behalf of the Public Accounts Enterprises Committee, welcome officials from the Ministry of Finance, Investments Division, the Ministry of Energy and Energy Industries, the National Gas Company of Trinidad and Tobago, members of the media and the public. May I also advise that this meeting is being held in public and is being broadcast live on Parliament's Channel 11 and Radio 105.5 FM, as well as the Parliament's YouTube channel, ParlView. Viewers and listeners can send their comments related to today's topic via email, that is parl101@ttparliament.org, facebook.com/ttparliament, Twitter @ttparliament. Now, the purpose of this meeting of the Public Accounts Enterprises Committee is to examine the audited accounts, balance sheet, and other financial statements of the National Gas Company of Trinidad and Tobago Limited for the period 2009 to 2015. The committee is desirous of hearing from the key stakeholders at NGC to learn the challenges being faced and determine some of the possible solutions and measures to overcome these challenges. The role of the committee is to help the National Gas Company improve its delivery of services in an efficient, effective, and economic manner. May I emphasize once again, the role of the committee is to help NGC improve its delivery of services in an efficient, effective, and economic manner. At this time, I would like to introduce members of our committee, and after doing so, we'll invite the officials from the Ministry of Finance Investments Division to do the same, followed by the Ministry of Energy and Energy Industries, and finally, the National Gas Company of Trinidad and Tobago. So if I may start from my right. On my right, members will introduce themselves.
Good morning, ladies and gentlemen. I am Cherian Kuchilo-Coburn, member.
Good morning to everyone. My name is David Small. I'm a member.
Good morning to everyone. My name is Wade Mark, chairman.
Good morning, Foster Cummings, member.
Good morning, everyone. Welcome. I am Jennifer Bitties Primus. I am a member of this committee.
Good morning. I'm Lester Herbert from the Ministry of Finance Investments Division.
Good morning. My name is Yvette Barb. I'm Director of Social and Economic Transformation at the Investment Division of the Ministry of Finance.
Ministry of Energy.
Good morning, Chairman. Good morning, members. Good morning, everyone. My name is Selwyn Lashley, Permanent Secretary at the Ministry of Energy and Energy Industries. The other members of the team are seated in the back row So where you leave chair, I'll ask them to introduce
Yes,
themselves.
thank you.
Randy Maurice, Senior Energy Analyst, Acton.
Good morning, Margaret Edwards-Barron, Senior Energy Analyst, Acting.
Good morning, Penelope Bradshaw-Niles, Senior Petroleum Engineer.
Good morning, Sheldon Butcher, Acting Senior Energy Analyst.
Good morning, Leroy Mears, Advisor to the Ministry.
Before Mr. Brooks speaks, the lady, I didn't get your name?
Lisa Burkett, Manager Corporate Communications at National Gas Company.
All right, thank you. Yes, Mr. Brooks?
My name is Sheldon Brooks. I'm the Chairman of the National Gas Company.
Morning. My name is Mark Luquan, President, NGC.
Morning. My name is Naranjit Pariag, Vice President, Finance and Information Management, NGC.
Good morning. My name is Frank Lukin, Consultant to the NGC.
Well, thank you very much.
Good morning.
We have one more person.
Yes,
yes,
good
sorry,
morning.
ma'am.
My name is Maria Thorne, Vice President, Corporate Compliance and Governance.
How can I leave out Maria Thorne?
Thank you.
Welcome, madam. Okay, thank you very much. Thank you to all of you. May I at this time invite the chairman of the National Gas Company to make a brief opening statement at this time. Mr. Brooks?
Thank you very much, Chairman.
If you may press your...
Thank you very much, Chairman, and thank you to the committee for the very warm welcome to the National Gas Company, and in particular, the focus on a solution-oriented approach. We are pleased to be here with you to share our perspectives and insights for the period 2009 to 2015. All accounts have been submitted to you, and we will assist by providing our best insights into this period based on the research of our board. The President and several executives were not present during the 2009 to 2015 period. That period, in fact, was chaired by Chan Chedi Singh and led by the then President Indar Maharaj. Our board was appointed in September 2015, and instruments were received later that month. Our President, Mark Luquan, we are very fortunate to have him. He joined us in September of 2016, having done assignments in Africa, Australia, and having led companies in Trinidad and Tobago. Since our appointment, we have made considerable progress on many critical areas of the company and group. And with your leave, I'd just like to share with your committee and yourself some highlights on some of the legacy issues which we inherited and which we have worked assiduously to correct. The first area, Chairman, is the area of governance. All of our audits for 2016 have been completed. Every audit for 2016 across the group has been completed. Statutory annual general meetings are being held, and in fact have been held in many of the companies. National Energy, NGC CNG, Phoenix Park, and NGC will be held on the 24th of this month. Within 90 days of taking office in 2015, outstanding audits at the NGC were completed, and all submissions were made to the line ministry, to the Ministry of Finance, and to the company's registry. All audits have been unqualified, meeting IFRS, International Financial Reporting Standards, IAS standards, International Accounting Standards, and IIES, which is the International Auditing Standards, and in fact have satisfied best practice requirements. We have implemented, from a governance standpoint, an enterprise-wide risk management system. We have functioning audit committees in every company. We've established audit charters. We have rigorous audit schedules that we're working with, and those reports come to the board and are overseen by the board with regularly scheduled meetings. Chairman, we have gone further. We have introduced in NGC what is called a flash report. The flash report allows us, on the first working day of each month, to have a clear look at the revenue, at the profitability of the company. So on the first working day at the end of each month, NGC and its companies is able to take a look at its results and see this is where we are at revenue, sales, margins, and profitability. By the 10th working day of each month, management reports are produced, which allow us to take a proactive look at the organization. We're working to reduce that to 7 days and to 5 days. So we have made considerable progress emulating the best companies internationally. In the area of performance, a review of NGC reveals a 25% decline in sales between the 2013 to 2015 period. Sales would have reduced from 17.4 to 13.1 billion. Gross profit would have reduced from 4.87 billion to 2.352 billion, 2.2 billion reduction. And profit after tax fell from 4.442 billion to 0.605 million, an 87% decline. That has been driven by reduced gas sales and gas curtailment. It has been affected by gas pricing, and in 2015 was affected by impairment charges of $2.6 billion. Those charges relate to $943 million related to the Beaton wastewater plant, 943 million, 0.9 billion, and Angostura Block C and 3A of $1.6 billion. The 2016 trend line, when our results are announced and approved at the annual general meeting in 2016, will show a considerable improvement on our 2015 result. Indeed, at Phoenix Park, which I can report on because you've had an annual general meeting and an approval by the shareholder of those results, its profitability has moved from $55 million to $64.3 million, a 15.1% improvement in 2016. And that is the kind of trend line that one will see across the group. So despite the challenge of depressed energy prices, in which oil fell to $27.67 in February of 2016, Henry Hub fell to less than $2 in 2016, and in fact had an annual average price of $2.49 US. Methanol prices trended at $178 per ton, which is 31% less than the 2015 year. You will see NGC, because of its approach to cost efficiency, re-engineering of its business, a focus on competitiveness and productivity, and a strategic realignment and the support of the team at NGC, we have begun to show improved results, and we are cautiously optimistic about 2017. That's important for NGC, and it's important for the country. From a strategic standpoint, point number 2, I spoke about governance previously. From a strategy standpoint, we met a company which had no strategic plan for the period 2016 to 2020. It was entering a markedly different period: shale gas, new gas jurisdictions emerging in Australia, Eastern Europe, fallen demand for its products, and gas curtailment. There was no plan. An international company had been retained. $90 million had been spent by the NGC, and across the group, executives did not buy into the plan, nor did they support the plan. Within 12 months, and after many late nights and weekend sessions, an excellent plan has emerged, fully subscribed to, supported, and contributed to by the executives of NGC, by the presidents of NGC, which plan is based on 4 pillars. 1, how do we develop and build the organization? 2, how do we secure the current business and move the business forward, inclusive of gas supply and gas certainty? How do we grow this organization locally and internationally? And then how do we strengthen our national contribution? That is to ensure that we have more estates, more vibrant estates, and build the country. It has been rolled out to the NGC group. It has been informed by the Putin and Putin Gas Master Plan. It has been accepted. It is our intention to submit that plan before the end of April to the Ministry of Finance and the Ministry of Energy, and having gotten the approval, we'll move forward. On the question, Chairman and colleagues, of gas supply, which is the second pillar of our plan, our focus is on securing our business and ensuring gas supply certainty. From a high of 4.2 BCF of gas, supplies have fallen to 3.2 BCF, split between the domestic and the export. It is a story of depleting reservoirs and the need for upstream investments in a more timely fashion, as evidenced by the Putin and Putin report and by the Rystad Energy report. It has manifested itself in contract shortages and in some cases non-renewal of agreements at most untimely moments. I must caution that Trinidad and Tobago has enough long-term resources, which resources have been calibrated in the order of about 30 to 45 TCF by BP and by Putin of between 20 to 40 TCF to satisfy domestic and export demand in the medium and longer term. The challenge is how do we navigate the short term to ensure that those long-term resources are brought to book to be able to support our export sector and to be able to support our domestic sector. And we, Chairman and team, have been hard at work on that. In 2016, we accelerated and completed all of the negotiations around TROC, which is the Trinidad Regional Onshore Compression Project. That project required a series of bilateral agreements between ourselves and BP and multilateral agreements involving some of the partners of Atlantic Energy. We were able, in the case of Juniper, through National Energy, to provide a heavy lift platform and other critical support on Juniper, which will see us winning 590 million scuffs of gas. TROC adds 200 million scuffs of gas. Following the Prime Minister's intervention in Venezuela and his visit, in which a memorandum of understanding was signed and executed, we were able, with Shell and with PDVSA, to execute a heads of agreement. We have formed technical teams, which technical teams are comprised of PDVSA executives, Shell executives, and NGC executives, both from a technical standpoint and from a commercial standpoint. And I'm pleased to report that those teams are hard at work. We have set ourselves, and the ministry has set us a target, the minister has set us a target of completing the gas supply agreement by July, and we are assiduously working toward that target, as well as completing technical and commercial work. And quite recently, we were able to sign off on the BP Angeline contract. These activities will not solve our problems, but certainly they will help us to stem the decline. We have got to look beyond the period 2019 to 2023 to see how we, and I'm going to use a Gulf term, tee up some of the required supply to ensure that as we look to that post-period, there's gas certainty and there's gas supply. In the case of contracts, many of these discussions are at an advanced stage, and the company is actively engaged in multilateral discussions, both on the upstream side with EOG, Shell, BP, BHP, and on the downstream side. Many of these discussions should have started and should have been completed by 2014 and by 2015. Unfortunately, they were not, and it is our responsibility to work through these very complex agreements, which were negotiated at a time when the gas architecture was very different, and to bring those to completion. That work is ongoing and is moving at a very rapid clip. Chairman, in the case of claims, the company has received $4.53 billion in claims directly related to gas curtailments in the 2010 to 2015 period. NGC does not accept these claims and is legally challenging these claims. These claims go back to that period, and regrettably, very little work was done on those claims. Some claimants have commenced arbitration proceedings. Others have commenced mediation proceedings. Notwithstanding our legal view, the fact of arbitration and mediation requires a constructive, purposeful approach to resolution. We have been able to extinguish in a very short period approximately $250 million or $1.6 billion of these claims without payment and without admission of liability. Without payment and without admission of liability. Each contract is different. In some cases, the shareholders are intertwined by interlocking shareholders, and in other cases, they operate independently. We are aware that our discussions in this public forum could lead to affidavit evidence, and therefore we must be extremely careful in what we do and what we say. We are very encouraged, and we're going to focus on this to try to resolve them in the shortest possible period, but we have to work carefully, purposefully, and constructively. The response of the NGC team, chairman and colleagues, at the leadership level and at the company level has been very, very heartening. The team and the staff have sacrificed, and they've been very professional. Our problem at NGC and in Trinidad is a global problem. It is not a problem confined to the NGC or to our sector. Many countries are facing a similar problem. Petrobras in Brazil, the shale sector in the US, in Canada, and many of the majors have taken the appropriate cuts and steps to rationalize their business. The question is, what is our strategic response and our resolve? And we are very encouraged because we are working strategically and purposely to address these issues. In the case of internationalization of our business, we see ourselves as aggregators, marketers, transporters, and we have rekindled many of the very interesting opportunities that arise internationally in Ghana, in Guyana, Cuba, Venezuela, to leverage things like our pipeline technology. Our efficiency in our pipelines is 99.9%, the envy of many developing countries and even developed countries. Our gas fractionation is avant-garde. We have good port and estate technology and good engineering, and we certainly have good institutions like the UTT and UWI with good intellectual knowledge and capacity, which would allow us not only to lift the NGC, but to lift the entire energy services sector, bringing valued foreign exchange, equity and dividend income, and service fee income. So, Chairman, we are cautiously optimistic. A lot of work has taken place in the last 16 months. We have completed our strategic plan. We are showing improved results. The bench strength and capacity of our team has improved, and we are cautiously optimistic. It is going to require considerable hard work, focus, and excellence in execution as we move forward. So, Chairman, that's a brief overview, and we thank you for the opportunity to do that, and we welcome your questions at this stage. Thank you very much.
Yeah. Well, let me, on behalf of the committee, extend to you another warm welcome and to thank you for your overview of where the NGC stands at this time. If I may ask very early, you mentioned in your opening remarks that the NGC does not have at this time a strategic plan, but you are about to submit one by the end of this month to the Ministry of Finance, Investments Division, and the Corporation solely Minister of Finance. In the absence of a strategic plan for the last 18 months, how has NGC been operating? You know, the good book says, where there's no vision, the people perish. So I would like you to explain to this committee, in the absence of a strategic plan for the last period, 18 months, how has the company been managing its affairs?
Chair, I perhaps did not explain myself properly. The company has a strategic plan. What I did say is that the company spent the last 12 months, having gotten into office and recognizing that there was no strategic plan, immediately set about to craft a strategic plan. The process that we took is that we involved all of the executives in the NGC, the presidents, the executives of the various companies, to formulate this plan. This is the document here. That plan has 4 pillars, and I outlined those 4 pillars, which I can do again.
No, there's no need for that.
So that there is a strategic plan. That plan is guiding the company. That plan has been validated and tested with the executives. And to the extent that the company is now very clear and very comfortable with the strategic plan, the intent is to submit that plan this month to the Ministry of Finance, to the Ministry of Energy, and progress it.
Could you tell us how long that plan has been completed?
That plan was completed toward the end of December, which we're using to inform our 2017 activity. It is a work in progress. It's dynamic. So that's when it was completed, Chairman.
Okay. And you So from the period when this board was appointed, was it September of 2015, you said?
It was late September of 2015.
To the present time, the company would have functioned for at least a year without a plan.
Not correct, Chairman. I don't mean to be rude. What we did is that we put in place for 2016 an annualized plan. Each president submitted an annualized plan, which plan went to the board. Those boards approved those plans with key performance indicators, which guided the company for 2016, each of the companies. What we did, however, is we recognized that we could not run a business on the basis of an annualized plan. And what we sought to do was to put in place a longer-term plan, taking into consideration what we thought were all of the key elements for 2017, 2016 to 2020. And that is the process that we followed. Because we could not, on coming in 2016, in September, October, craft a longer-term plan, in any credible, sensible plan. And more than that, we faced a situation in which the executive said to us that the plan which had been developed, they completely disagree with and wish to distance themselves from.
So when that plan is submitted in April, you expect approval within what period of time, Mr. Brooks?
Chair, I can't talk on behalf of the ministry, so I wouldn't be so bold. We are hoping that the ministry has a process. We will follow that process, and we will hopefully get to consensus on it in the shortest possible time.
Would you be kind enough to make a copy of your plan available to this committee?
Sure, Chairman. We will be more than happy to make a copy available, but I think in the best form, it perhaps should go to the ministry first, get the approval, and once we've gotten the approval, we'll submit it to this committee.
Now, I wanted to also raise the issue of salaries. Okay, before I go to salaries, I'll ask my colleague here to raise it.
Mr. Brooks, I noted you would have you indicated that $90 million was spent on the plan, but that the executives totally disagreed with it. Could you give us an idea of what was the process? Because I would expect if a strategic plan is being developed, the executive should have been involved. So I have a difficulty coming to terms with after $90 million being spent that they totally disagreed with the plan. Could you shed some light on that for us, please?
Well, I think what Mr. Brooks is saying basically is that the plan was developed, yes, with the executives, but there was no final approval or final buy-in into the plan. Okay, the plan had not been finalized, and the executives had not actually bought into the plan. It had not reached that stage. So I think that's what Mr. Brooks is saying, that the final plan was never actually approved or been bought in by the presidents of the various organizations within the group.
Tell us, Mr. Chairman, which agency or body was responsible for formulating this plan on behalf of the NGC, which cost the taxpayers $90 million?
The plan from our research would have been led by the then president, Indamaraj. It involved an international organization. Regrettably, and to our surprise, none of the executives seemed to support it. Many claimed that they had not been fully involved in the process. They disagreed with its contents. We took the pains as a board to read through that plan very carefully, to meet with the executives, to share our concerns on the plan, and to ask of this organization that no further money be spent to develop any strategic plan going forward, and to engage the executives who willingly agreed to build out what we felt and what they felt would have been a more relevant, a more credible, and a more forward-looking plan.
Chairman.
Okay, go ahead.
Chairman, I think it's important, good morning everyone once again. I think it is important that we establish the period of time for this strategic plan. What is that period of time?
Thank you very much, Mrs. Batiste. The period of time for the plan is 2017 to 2020. That is the planned period.
Is that the initial plan or your plan?
The initial plan was meant to be 2016 to 2020. It was an unfinished document, as Maria said. It was not accepted by the executive and was incomplete in our view, missing several key areas. What we then sought to do is to engage the executive, develop what, in the view of the executive and team, was a far more comprehensive document, which is what we have today and which is what we're going to be submitting to the ministry.
Yes,
Mr. Brooks, could you shed some light in terms of what was the process utilized to secure the services of this international company?
At the time, certain companies were looked at, and they were considered as a preferred supplier of the services, having been an internationally recognized company, having done this kind of work over the period, over time. So it was treated as they were treated as a preferred supplier, and they were engaged, having been approved by the board of directors at the time.
Single preferred supplier?
As a preferred supplier, yes,
Thank you.
Would you want to share with us, Mr. Chairman, the name of this international company? And would you be kind enough to supply us with a copy of the draft strategic plan of that company?
Sure, Chairman. I'd prefer to just submit that in writing to you rather than name that company publicly.
Okay. Let me just ask, on the question of sales and gross profit, we observed in 2014, as you indicated, gas sales was about 15.8 billion. I guess that was the peak of prices, high prices, commodity prices, volumes, among other things. And in 2015, it went to 12.5 billion. The gross profits went from 8.4 to 4.5, according to the figures I have before me. What I would like you to clarify for us is that wages and salaries moved from 338 million to 623 million between the period 2014 to 2015. And total staff costs increased from 433.5 million in 2014 to 750 million in 2015. Could you explain to this committee what was responsible for these huge increases?
Sure. May I just ask our Vice President of Finance to address that question?
Morning again, and thank you very much. In 2015, you would have seen a significant increase in salaries and compensation costs from 433 million total to 750 million from 2014 to 2015. Now, what happened in the company over the years, the company compensation is made up of merit and market. And there was a lag in terms of the completion of market adjustments for the company. So there was 2 cycles of market adjustments which were due in 2011 and 2013 that was not completed. And those adjustments were approved and paid out in 2015. And consequently, that is what would have led to the increase in the salaries costs from 2014 to 2015.
Could you explain to this committee why these matters were not approved at the appropriate time? What were some of the factors causing that situation to arise so that you had to pay everything in 2015?
Well, Chair, what I could say is that the company at the time would have made their, gone through the requisite process in terms of seeking approval from the line ministry for the payment of wages and salaries to all employees. There were significant delays in terms of those approvals. I can't speak in terms of what caused the delays at the ministry, but the approvals were received and paid in 2015.
I'm looking at your accounts for 2015, 31st of December. I'm on page 70 and 71, respectively. I have, under the cost of sales, I see you have staff costs amounting to $151 million in 2015. And then I see also on the administrative maintenance and general expenses, another component called staff costs, amounting to $623 million. Could you explain why we have these two components and why not one?
So, Chair, this is a presentation of how costs are presented in the financial statements. So the cost is presented, you will see there's two elements. Cost of sales, those are the costs directly involved in the operations of the business, and therefore the salaries costs relating to those employees who worked in the direct operations of the business will be allocated on the cost of sales, and all the other staff will be allocated on the selling general administrative expenses.
Would you want to provide us with the number of employees in the categories of employees under the two headings? How many workers are employed in NGC under this broad heading of staff costs, under the sales, cost of sales, and their respective offices, and the second category under administrative maintenance and general expenses, $623.171 million. Could you again give us a detailed breakdown of the category of workers?
Sure,
and,
Chair.
And as you're on that, could you give us a ballpark figure as to the total employees of that company?
Sure, Chair. With your permission, I would like to submit that information in terms of the headcount for the company over the years to you.
No, I'm talking about two things. I'm saying that you need to submit to us a detailed breakdown of the categories of workers, the numbers which you'll submit in writing.
Sure.
But you must know right now as we speak, and the chairman must be aware, as to the number of employees of NGC. You don't have to submit that in writing. You can tell us that now.
Sure.
Chair, the number of employees at the NGC currently is 1,047 people. At NGC, we have 759 people. At National Energy, we have 126 people. And at Phoenix Park, we have 182 people, yielding a total of 1,047 persons.
Thank you very much. And what I would like, Mr. Chairman, is if you can provide us in writing a detailed breakdown of the categories of workers, the offices that they occupy. So we will be able to have that on our records. I'll ask Mr. Foster, Mrs. Batiste, you can proceed at this time.
Thank you kindly, Mr. Chairman. Mr. Chairman of the committee, Mr. Chairman of NGC, I am focusing on issue number 14, which has to do with auditing. In response to our question that was posed to NGC, how effective has the internal audit unit been in detecting inadequacies and misappropriation of funds? We were advised that inadequacies in internal controls were identified and reported to management and the audit committee for corrective action. My question is, what is meant by corrective action? What does that entail? And what measures have been implemented to ensure no further recurrence of such inadequacies? It's under issue number 14, auditing.
Chair, could I have a repeat of the question, please?
Certainly. In response to our question, we were advised on the inadequacies in internal controls, which were identified and reported to management and the audit committee. My question, therefore, is what does corrective action entail? And what measures have been implemented to ensure no further recurrence of these inadequacies?
Thank you very much.
Okay, I think I'll just, morning, I'll try to answer at a high level, and I'll probably ask Naranjit, our VP Finance, to go in more detail.
Certainly.
But you speak to the issue of internal controls. And I would like to highlight some broad areas since the new management and board has come in place. Some of those areas include, when we speak of corrective actions, means putting proper policies and procedures in place. That's one action. And those would extend to new ethics policies, conflict of interest policies, which are now approved by the board and sanctioned across the entire NGC group. So that was done in the last months. We also have in place the regeneration of the enterprise-wide risk management system, where we identify areas of exposure at the strategic and operational levels. That is, in essence, being worked through as a living process that is going through the audit committee. So in fact, today, there's even a session with all the presidents and the executive leadership teams to go through those risks in more detail. There is focus on the procurement practices in the organization. So the previous audits with respect to the procure to pay in the SAP system would have been an area of exposure where you can have, for example, double invoicing, loopholes in your system. So those areas of exposure have been 95% closed. It's in progress, and I'm sure the VP Finance can talk about a bit more about that. We also have internal audits that are scheduled with across all divisions in the company. As the chairman would have alluded to, the audited statements have been brought up to date, and shortly we would be releasing the 2016 audited statement shortly. There's also the way how project management is being done in the company and what policies governing those kinds of projects where there are significant spend in the company. There's now a project management policy which includes procurement plans to be documented in accordance with the project management, as well as individual stage gate decision making so that you can get the right decisions being made on these projects. And I would also add that Ms. Thorne is also a new function. She's in charge of corporate compliance and governance, which was previously incorporated in the legal services and corporate services function. This is a dedicated function that is ensuring that our board minutes are up to date, all the committee minutes are up to date, all the compliances with the state enterprise manual is also being done. and the compliance with the Company Act. So this is a dedicated function which is evolving. So that is a sort of a high-level answer I would give in terms of corrective actions, and I would ask the VP Finance to go in more detail.
Okay, thanks very much. Just a couple more initiatives in terms of dealing with these issues. One is the whole issue of governance and reporting. So there is reporting on a monthly basis to the board and the board subcommittees. There are monthly meetings of the audit committee and the board of directors, of which these issues of governance are reported directly up to those committees, right? Further, with respect to reporting, as the chairman would have alluded in his opening statements, we are generating financial reports on the first working day and complete reports on the 10th working day. We are looking at our performance relative to our budgets and plans, and management has to account for any deviations from the plan. So from a reporting perspective, there's opportunity for line of sight in terms of if there's anything going wrong. Yeah, so that's cost management, governance. In terms of the information technology platform, we have also placed significant focus in terms of our IT and governance controls. So we have we advance in the completion of exercise of looking at all our access privileges of employees to our IT system. We use the SAP system, and we are looking at role configurations and the accesses by each employee to our IT system. That exercise is almost 95% completed, and that will strengthen our whole internal control process in the organization. Additionally, on a weekly basis, at our weekly executive management meeting, there's reporting on the closure of our P1, and P1 is our high priority audit action items. So on a weekly basis, that matter is addressed at the executive meeting.
And permit me, Mr. Chairman, I was particularly hurt, Mr. Chairman, in the information coming from yourself regarding the introduction of what you term a flash report, which allows you and your board a clear look at revenue at one day at the beginning of each month, and also the 10th working day management reports which are produced. Perhaps it would be useful if you could share a little more information on how useful this new approach has been in placing the NGC on a growth path.
Thank you very much, Mrs. Batiste. Just to add one or two comments, and I think shared will be evident to you and to the committee, the tremendous emphasis and work which has taken place on governance. And just to make a couple additional points, we actually did a request for proposal for all of our auditors when we got in. That was completed in 2016, and we have appointed new auditors. And more than that, we have worked very closely with our internal and external audit departments to coordinate their schedule of work, to ensure no overlaps, but to ensure that there's a close correlation, to ensure that on a line-by-line and project-by-project basis, there's proper oversight of projects. On the question that you raised of the flash reporting, what we have done with the flash reporting is we have adopted some private sector approaches which allow us to be far more proactive with our business, so that we have streamlined the report across the company, so that we take a look at revenue, we take a look at your sales, we take a look at your cost of sales, we take a look at your expenses, and then we take a look at your profit before tax. So that gives us a high-level view on the first day of the month as to how we are performing. If there's any remediation action to be taken, we're in a position to take that a lot earlier. No longer are we waiting until 3 weeks, 4 weeks, or a month. With management accounts by the 10th working day. And that's the protocol that we're following. What we also did as well is that across the team with our presidents and our vice presidents of finance, collaboratively, we streamlined the financial reporting across the group. So what it did is that it reduced the time for consolidations, improved the consolidation process, and allowed us to have a group-wide look at the organization, which is the standard that international companies use. We've also deepened the process by taking a line-by-line look at each of our expense items, so that we're able to say, in the case of each expense item, where are we slipping, what can we improve, where are we doing well, and then how do we move as an organization back to our KPIs and back to our strategic plan. So that's the process that we're taking, Chairman and colleagues.
Thank you very much, Chairman, and welcome to the members of the Board and Management of NGC and the Ministry of Energy and Ministry of Finance. In your written response to a question, NGC has stated in regards to the awarding of contracts that NGC's awarding of contracts is governed by tender rules, procedures, standing orders, and NGC's delegation of authority. Could you give some clarity as to what is meant by NGC's delegation of authority in reference to the award of contracts?
Okay, well, NGC's delegation of authority, it's a document which allows various levels of personnel within the organization to have certain authority for respect to approving contracts. Certainly, there are certain levels which have to go to the board, and basically those would be like values of contract over a certain limit would go to the board. Then you would have those that would go to the tenders committee, and then obviously there would be those that would be approved by the president, and then it is then delegated down to management within the organization. Okay, you also have that delegation, as I indicated, in terms of the president. He can delegate certain authorities in terms of award of not only contracts, but other areas within the organization, approving authority within the organization. So this is basically what the Delegation of Authorities Manual allows for within the organization.
You want to add something, Mr. President?
No, I would just say that that covers not only the award of contracts, but also any variations to contracts. So we have a framework that approvals are required.
Yeah.
Thank you. In relation to, also in your written response, in relation to the whistleblowing policy, I see here that a policy was drafted in 2015. What is the status of that policy?
Okay, the policy was originally drafted to apply to NGC in 2015. Then it was felt, in fact, the position that we have been taking within the organization, within the group actually, is to have group policies which would apply throughout the group. So we extended the policy to apply throughout the group. We have basically sought comments from the other members of the group. And it's in a position now whereby there were some further comments that were submitted by one or two of the other companies, that is National Energy and Phoenix Park Gas Processors Limited. We're in the process of incorporating those comments, and once we have finalized it, then we'll be submitting it to our boards, various boards for approval.
Is there any policy in place to deal with discrimination within the company or within the group?
Well, our business ethics policy basically would address areas of discrimination within the organization, okay? And of course, will be governed by the laws of Trinidad and Tobago.
My final question, does the NGC have any policy in place to deal with issues of conflict of interest?
Yes. In fact, just last year it was refreshed, and it was, in fact, we have, the policy is in effect. In fact, we have each employee is required to sign a conflict of interest declaration form on a yearly basis, and basically once it's signed, it is filed and it is maintained within the organization.
Thank you. Yes. President?
Yes, that forms part of our new ethics policy as well. So everyone has to sign these conflicts of interest documents, starting with me, every year.
I'm pleased to hear that. I had some other questions in relation to some of the period 2009 to 2015, but having heard from your chairman in terms of the direction that the company is now, and particularly the governance structure that's been put in place, I think that I no longer need to ask those questions. Thank you.
Thank you, Mr. Chairman. Once again, thank you for giving me the floor. Welcome again, members from all the entities before us. My question, first question on the track I'm diving straight into the numbers because I'm noticing a certain trend here in the company's financial performance. Now, Mr. Chairman or Mr. President, whoever chooses to take this question, I've noted that the company's margins have dived significantly from 2013 to 2015 in particular, in terms of your margin, in terms of your revenue as opposed to your expenses. Whereas in 2013, our margin was 31%. In 2015, that margin was 9%. And I want to tie that into the increase in the costs of operations, as outlined earlier by I think the VP Finance. In terms of your increased staff costs, I noted that your increased staff cost was approved and paid in 2015, a year when your profits had decreased by 80% from the year before. So that I struggle with that just operationally, that in a year when your profits have declined by 80%, you are increasing your operating cost, which is the larger number that's going to be fixed going forward, significantly. So that I would like to understand what is the plan to treat with this, because your margins have decreased. That seems to be a trend that has been going on for the past 3 years. Your operating cost has increased. And I am struggling to understand your profitable, how you're going to sustain yourselves, because within your submission, on the risk management, you said right now your company is mainly financing its operations with debt. So that unless this statement is probably, I'm not taking it in proper context, but when I marry those three things, your margins are decreasing, your costs are increasing, and then you're financing your operations with debt. I would like to understand what is the plan to bring the company back on a growth path.
Thank you very much, Mayor Coley, Senator Small, for that
Certainly.
question. Your observation is absolutely correct. We have to address our margins, and we have addressed our margins as well as our costs. And to give you some examples of the work that we did, the Teak and Pui platform was costing the NGC $250 million in loss annually. $250 million. We were able to lease out that platform, come to an agreement with Repsol in 2016, rationalize that business, and save $250 million. Insurances across the group, there were different arrangements, and because of our strategic focus and alignment as one group, we were able to reduce our insurance costs by 23% and save $12 million. We launched a vendor forum in 2016, speaking to all of our vendors and providers and saying to them that the jurisdiction of Trinidad and Tobago has to be more competitive and the NGC has to be more competitive if we are to win business. And we asked each of them to try to provide services at a reduced rate of 20% less, because we were very conscious, as you are conscious, that that margin is not sustainable. The response that we've gotten is very positive, but we did more than simply ask you to reduce it. What we did is that we actively looked at the business flow and the business process to say, one, how can we improve this in terms of efficiency? Two, how could we better streamline it across the group? How could we manage our inventories better across the group? How could we manage our buying better across the group? How could we put supplies in place in a way on a contingent basis or a consignment basis without cost to the organization to fix it? We took a look at our investment portfolio and said, through the Finance and Investment Committee, how can we cause that investment portfolio to perform better by taking a look at the construct of the portfolio, the asset allocation, the investment strategy, and move it forward. What we met in 2015 was, relative to our staff, was an obligation which had crystallized. Our staff, and God bless them, the staff of the NGC is a tremendous group of people. We took as you know, there was a wage freeze in 2015 and 2016, and our staff understood where we were. The dispensation going forward is one way we're going to have to be very careful because the past is not going to look like the future. And so we have to manage our margins a lot more tightly, and I've given you the context of competitiveness. I've given you the context of the focus on productivity, working smarter, using ICT to drive our business, the use of vendor forums and aligning more closely to our vendors, better management of our inventory, management of overtime, and indeed all of our costs going back to our OEMs to say, how do we take costs out of this business to ensure that we are relevant going forward? And our president may have some thoughts that he'd wish to add, but that is the philosophical, commercial, overarching strategic approach that we use at the NGC.
Senator Small, I guess there are other things that, that the management is working on, and that is also enhancing revenue. So one thing is to look at the cost line, and the other thing is to look at the revenue line, and you may ask, well, what can we do besides the margins on contracts? And one of those areas actually lies with marketing and trading. So one of the areas that have started over the last 4 years, and particularly in the last year, we have also been involved in third-party trading, which means that we actually buy and sell LNG that doesn't belong to NGC, and we have gotten into government-to-government arrangements with places like Egypt and so on, and that has actually worked in the favor of Trinidad and Tobago. I think you would also be aware that there are several countries looking to import gas going forward, and it's it's scheduled to go from 30 to 50 countries in the next decade. So there's an opportunity for marketing and trading to become even better across not only NGC company but also PPGPL as a subsidiary in the group. And I think going forward, even beyond that, possibly Petrotrin and with the ministry going forward. So there are areas we are looking at on the revenue side, and we are also looking at areas in procurement, such as e-tendering, possibly e-auctions in the future, which can also help in some cost savings going forward.
Thank you, Mr. President and Mr. Chairman, and I note from the chairman's response in particular the issue of how you manage your costs and in terms of how you sensitize your workforce. Because a third party looking at the numbers here, you have a little over 1,000 staff, and your wage bill in 2015 was $555 million for 1,000 staff. It just seems like a large number. So that, and sensitizing your staff to the realities of the current state of the company, and not only the company, but the business that you are in, it's very, very important to stabilizing the company and plotting going forward. Because also when I looked at the numbers, over the previous term, the average wage cost in terms of wages to revenues was about 2%. In 2015, it jumped to 4%. Now, that may not seem like a big jump to most people, but all along history of the company, that has been in the 2% range. All of a sudden, that's doubled. So that is something you need to, in my respectful view, put a little, keep close. My second and final question, and this wrong, I want to just ask regarding your debt management. I've seen that your debt service coverage ratio in 2013 was 15 times. In 2015, it's down to 3 times. And then your interest cover was 23 times in 2013. In 2015, it's down to 6 times, which means that your ability to service your debt has markedly reduced. So I would like to understand what, I have a good hand on what's causing it. I want to know what is the plan.
Thanks very much. So the area of debt management is a key area of focus for the NGC at this point in time. Clearly, I mean, as you rightfully said, the ratios are declining in terms of the cover, and that's directly associated with the cash flows being generated in the business and declining cash flows. And therefore, as both the President and Chairman said before, it speaks to some of the initiatives that the company has to take in order to boost that top line and the cash flow generation. So one is the initiatives in terms of the commodity trading, the whole issue of cost management in the business, the specific focus on costs in all areas of the business, looking at generating additional returns from our investment portfolios. So these are some of the initiatives that will boost our cash flows to improve on our coverage ratios as we move forward.
Thank you, Mr. Chairman. Mr. Chairman, I wish to commend you and your team for recognizing the importance of having a strategic plan and having complete what you defined as an excellent plan. When I looked at the 2011 to 2015 strategic plan, there were some issues identified as weaknesses, and it related directly to your human resources. You also just made the comment that thank God for your staff. So I am hoping that within the new strategic plan, you would have taken action to, one, treat with the issues related to the human resources, because it says here, while the company had been making strenuous efforts to correct many long-standing human resource issues, employees remain unconvinced. So I would like you to share with this committee what you have done thus far, or what you have included in your strategic plan that treat with some of your human resource issues, and whether you have in fact aligned your structure now with your new strategy.
Thank you for that question. So I will certainly take this, this question. We would start with the fact that we now have a strategic plan. One of the first things we had to do is align the organization with the strategic plan and the budget for 2017. So one of the activities that were completed in the month of March 2017 was the rollout of the strategic plan and the budget for 2017 to all divisions in the company. So all employees should have now been witness to the strategic plan, what are the areas of focus, and why the company is actually has to conduct its business in a certain way that is quite different for the future, as we recognize. The other issue that you raised is the issue of structure. You would have seen that, well, part of that discussion now going on is after the business strategy is rolled out, we are also formulating an HR strategy. The focus on 2017 is going to be a lot on skill, technical skill, because we recognize that we are trying to build the institutional capacity of NGC to meet the objectives of the business strategy going forward. You would find that in the area where we have a lot of commercial activity, particularly with expiring or expired contracts, for example, that's one area we would recognize that there's a need for commercial restructuring, as well as the focus on marketing and trading that I just mentioned. And of course, the legal side of the business has to be improved when it comes to having all these contracts in place. So that's just one example of what we're thinking and doing when it comes to revamping the structure of the company. That exercise, we've used a consultant to help us through this exercise to see what are the needs that we have and how we have to meet some of those needs going forward. That still has to be discussed fully with the HR committee and the board. So that's work in progress. The other things that we're doing is trying to communicate with the organization, as I've just said, starting with the rollout of the strategic plan, the budget. Soon enough, we're also revamping the bonus plan, which still has to be fully finalized and approved. But once we have that, that will be also rolled out in the organization. And now the process over the next month will be to finalize what we call the IPCs, or the performance measures for each of the individuals in the organization. So at least we should have, at the end of the April or in May, early in May, we should have, first of all, the strategic plan rolled out. We should have the budget that has been approved also rolled out to the organization in terms of what projects we're doing, what are the activities for 2017. We also would have the bonus plan approved and rolled out. That would be linked to supporting some of the strategic measures in the strategy. Safety is one of them. Completion of our projects is one of them. Governance is one of those areas, right? So as long as we have that alignment there, and we kind of formalize it in terms of the performance contracts for the individuals, then we should have a better rollout and alignment in the organization. And then we plan to have quarterly sessions which would therefore inform where are we as an organization at the end of each quarter. So that's how we plan to run the business. So the first quarter meeting should have happened this month. There were too many activities this month. They will happen in May, right? So that's the broad view.
Thank you very much, Mr. President.
With me, just to piggyback a bit and to refocus the President's attention to 2 points he made, I would like you to advise this committee what are your bonus plans and what is the link between your bonus plans and the performance measures that you speak about.
Okay, good question, and that's actually a center of discussion at the moment, right? So, that's going through the board. But the idea is that we would have a bonus plan that would have a few elements in it. One element would be how the group is performing. The other element is how the individual companies in the group are performing, and the other element, or last element, is how the individuals are performing in that group. So that is sort of the very broad genesis of the bonus plan. When we look at how we are shaping that bonus plan, we will look at weightings and measures that relate to the areas we want to improve in 2017, certainly. Those areas are 5 main areas. One is safety, and the other is our cost management, revenue management in the company. The third area is how we actually conduct our projects, whether we meet it on schedule, on time, etc., without quality issues. The fourth area has to do with skill in the organization and how we actually improve that by the end of the year. And the fifth area has to do with governance. And we spoke about the P1 items and the high exposure risk areas. We'd like to close those actions off. So the bonus plan is actually linked around those elements. The individual measures, therefore, would have those elements included along with their technical, functional areas to improve. So those are actually being formulated during the month of April. By May, we plan to have this fully approved and rolled out.
Clear, Chairman, and perhaps is my ability to internalize what the President, all that the President has just said. But is it that the bonus plans would be linked to percentage of the profitability of NGC, or would it be linked to the annual income of the individual?
Well, as I said, there are three elements, and a portion of it will be linked to the group financial performance. That's one of the measures. It's not going to form the majority of bonus because that's dependent on performance and the company performance. But there is an element where the group financial profitability is included for that bonus plan. If the group performs better than expected, there's also a slight increase. If it performs less than expected, there's also less to be paid out. So that is designed around those kinds of principles. The company side of things is really linked to the way how individuals are contributing to the results of the company in safety and those areas. And the individual level is where you can impact the input side of some of those measures. So for example, if we take the company side is linked to safety performance, where you want to have 0 recordable injuries, for example. One of those areas that can impact that is how you are making your walk-arounds as an employee and making your safety walks and things like that. So those are the things that individuals can impact and be measured on to get the results at the company level. So that's the principles.
May I just add 1 or 2 points? Because Mrs. Cockburn asked the question around employees and what are we doing from an HR standpoint. And I think our President and Vice President Finance who quite elaborated on some of the key areas. Just 1 or 2 areas to add. We are working very closely with the NESC, with UTT, and with UWI in programs with the NGC to ensure we improve the skills of people. So that, for example, we're talking to the engineering departments, the petroleum departments to craft programs. We are also bringing in institutions to do broader training across the group in areas like FIDIC, contracts, project management, etc., so that we're able to train larger groups of people. That's one. Two, our philosophy is promotion from within the group. So if an opportunity emerges and you sit in Phoenix Park, but you happen to work at National Energy, you should have the opportunity to be able to be part of the promotion process for that opportunity. And we've made that very clear. So we want to promote across the group and deepen the skill bank across the group. If, of course, we don't have the right resource or skill set, we go outside. The third area that we're looking at is a group ESOP program, an employee stock ownership program. Because we have TTNGL, the Trinidad and Tobago Natural Gas Limited Company, which is our subsidiary, which we launched $1.6 billion. It's the largest and most successful IPO done in Trinidad and Tobago. We have an APO coming, and the capital appreciation on that has been over 20%, with the dividend yield being over 6.5%. And we want employees, as they work and as they promote NGC and do well, for them to also have the benefit of those shares and the dividend income as well. So that is part of our philosophy, which links many of the elements that our president and our vice president spoke to. And I thank you for the opportunity just to share that with you.
A couple of areas of clarification. First of all, I'd like to ask the chairman to provide us with a copy of the delegation of authority of contract document that Mrs. Thorne made mention of earlier. I would also like to bring to your attention that we have requested, but it is yet to reach us, a copy of the management letter for 2015. So I don't know if you could make that available to us before you leave, or if you can get it to us before you leave, but that is a very crucial document we would like to look at. I would also like to suggest, and even before I do, may I ask, Mr. Chairman, who is your new auditing firm or company?
The firm of Deloitte & Touche Chartered Accountants was appointed in 2016 on through an open tender process. They were awarded a contract for 3 years.
But they were there before, but they just went
Yes.
through a process.
Yes.
As you're on that, Mr. Chairman, I have observed that the management letters between 2009 to 2014, because I don't have 15, one of the significant features throughout those management letters would have been rather the severe weaknesses of the internal control systems or processes within the NGC. And I must admit that when I looked through Ernst & Young, they were very detailed and comprehensive as compared to Deloitte, which I find they just skim things over. But I would like to ask, as we seek to strengthen NGC, would you be kind enough to submit to us in writing a detailed outline of all the steps and measures taken to plug and to ensure that the various internal control weaknesses identified between 2009 to 2014, and I don't have 2015, but I would imagine that that would have been a repeat in 2015, and if we could have that submitted in writing to this committee, so we would be able to see what steps are being taken by the NGC to strengthen internal controls within your operations. So I would like to have that in writing. The other thing I wanted to raise here is I saw in 2000 and I think it's 12, yes? Yes, 2012, Mr. Chairman. If you go to the management letter on page 17, I don't know if you are in a position to explain to this committee cost overruns I'm dealing with here. I'm dealing with liquid fuel pipeline, which was constructed on behalf of the government of Trinidad and Tobago. And its original budgeted cost, according to the document, was $585 million, and it ended up at 1.04 billion, which is a huge cost overrun according to the document. I wanted to ask whether the observations made by the auditing firm Ernst & Young at that time on the weaknesses in the project management capabilities of the organization would have been addressed. And would you be in a position to tell us what would have been responsible for these cost increases and delays and the variation of the scope of work as it relates to this liquid fuel pipeline? Are you in a position to help us in this area?
So as we know this, thank you for that question, Chairman. The project has been one of the legacy projects that we have had to try to finish in NGC. We recognize this project has been started since 2007, so we're really talking in the order of 10 years. This was designed to have multi-fuel pipeline run from Point-de-Pierre refinery to Caroni. This was, of course, in the context of road tankers on the road and things like that, that this project was undertaken. In some of the explanations that we have received in terms of delays over the years has been linked to the history of steel price hikes that have been experienced over the project. That has been one factor. The details can be provided afterwards, but these are some of the high-level factors. The other thing is there have been a series of project management or manager changes over the years, which would of course have slowed down the project quite a lot. And there was incomplete designs, which would have resulted in, of course, scope being not well defined, and therefore increases in cost and delays associated with some of those factors. The NGC new management and board, we have undertaken to take this project in very close collaboration with Petrotrin and NP. That this has been undertaken for the last months. We can say the current schedule is now expected to have the jet fuel and diesel completed by July of 2017 this year. And the gasoline portion will be completed by September 2017. So that's the latest information we have.
Could you tell us what is the current cost of this project?
The final cost as of March 2017 is forecasted to be completed at $1.284 billion.
And could you give us a breakdown, suppliers in writing, a breakdown of what would have cost or caused rather, sure, apart from what you have outlined?
Yes.
And if you give us in writing, the original figure of 585 million?
Yes.
Now the final cost is 1.4?
284.
1.284.
Yes.
So give us a detailed breakdown, sure, of that. The other area I wanted to raise, yes, go ahead, Ma'am.
Mr. Chairman, I am looking at issue 3 here, and it states that Petrotrin would have reimbursed NGC for all costs incurred. Has NGC been reimbursed?
The answer is no.
We have not been reimbursed at this stage. We are working very closely with Petrotrin and National Petroleum on the project. In fact, there is some money owed to Petrotrin as well. That is going to come through the PSIP program. What we have focused on is to try to bring this legacy, long-standing project to a close by July and by September, as our president said, and we're working very closely with the ministry from a reimbursement PSIP perspective.
All right. All right. I also wanted to ask, there's a provision in your submission here that deals with long-term receivables. And there's something called staff loans, Mr. Chairman. Could you explain to us, first of all, whether staff loans is a mechanism or a instrument that has been approved by the Minister of Finance as corporation sole? And could you provide this committee with an appreciation of what this entails? How many people have accessed these staff loans? What is the volume, or the value, I should say, of these staff loans? What is the maximum one can access a staff loan at? What is the outstanding amounts owed by staff to the NGC? And as I said, whether this is not the first time we have encountered this. And the last time we looked at it, we asked the particular agency that was before us whether they had the approval of the Minister of Finance, and they did not. So I don't know if it is the same with NGC. So could you explain to us this whole novel concept of staff loans?
Chairman, thank you very much. With respect to staff loans, those would have been loans provided to employees to be repaid over a particular period of time. What I want to request from you is that the company can provide you with full details of all the staff loans and the approval process that would have been received.
Well, could you tell us, Mr. Chairman, whether this is a matter that has been approved by the Minister of Finance?
Chair, I will have to come back to you in terms of the approvals that would have been received.
So are you telling this committee that you were lending monies to staff members and you didn't have approval from the Minister of Finance? Because to come back to us means what? Are you going to put it in writing, or you don't want to disclose whether you got the approval of the Minister of Finance?
What I'm saying is I don't have the information right now in terms of the approvals.
Could you tell us, for instance, how many people were involved in this? You have information on this?
Chair, the details, we don't have it at this moment.
Listen, this is a very serious meeting, and I take umbrage to a very important agency and company like the NGC coming before this committee and telling us that you don't have basic information available, when in your submissions you have indicated these matters. So at least you ought to have the information available. Even if you cannot give us in detail, you can give us a summary and then subsequently provide us with the information. But you cannot be telling us every time we ask a question, you're going to get back in touch with us. That is not the purpose of our meeting. We need to get information, and details can come later on, Mr. Chairman. But at least you must have an appreciation of what is involved here. There's public money, you know. The NGC is owned by the taxpayers of the Republic of Trinidad and Tobago. And therefore, we are acting on their behalf, and we want to get information. So that's all we're asking. Don't give us all the details. Just give us a summary, and then you can submit subsequently details. That's all I'm asking on behalf of the committee. If you want to come back to the point, Mr. Chairman, you can do so, but please provide us with some summary of this particular matter. Mr. Chairman, maybe while the accounting officer is munching on this one, may I ask you the following? We have observed that the NGC seemed to be the whipping horse when it comes to being asked by organizations to pay up. In other words, you are being sued. You just admitted that you have claims amounting to 5 billion and above. And you have recovered, you said, or you have been able to address over $1 billion in claims thus far. What I would like to have clarified is this. When the NGC is entering into a long-term contract, gas supply contract with BP or BHP or EOG, is there any provision in those long-term contracts that would impose sanctions and penalties on these multinational giants if they fail to comply or they fail to supply NGC with the requisite supply of gas in the 20-year contract? I am asking this because I am realizing, Mr. Chairman, that other players are suing the NGC based on what you have said. But you have not told us whether NGC is suing those other players who are supposed to be supplying you with gas for 20 years, and for some strange reason, they have failed to supply you with gas. So I would like to know, and the people of Trinidad and Tobago would like to know, whether there are provisions in these long-term gas supply contracts between NGC and these powerful energy giants that supply you with gas as it relates to shortfalls and what action you can take on behalf of the people of Trinidad and Tobago whenever they fall short in supply, rather than you being sued consistently by other persons and organizations. So I'd like to have some clarification on that, Mr. Chairman.
Chairman, taking a step back, the NGC was very careful back in 1995 and 1996 to ensure that it properly contracted for supplies of gas during the 20-year period. These agreements were struck at a time when the NGC and the government of Trinidad and Tobago was attempting to nurture a downstream petrochemical sector in gas, in ammonia, and in methanol. And therefore, many of the agreements with the upstreamers, BP, BHP, EOG, in the construct of their liquidated damages provision, in the construct of their force majeure provisions, all differed. And there is a misalignment between the penalty provisions and those contractual provisions with the upstreamers versus the downstreamers. The protection at the time was that given that for many years we had an overabundance of gas, that it would not occur. In fact, it did occur, because the challenges during the 2010 to 2015 period, when continuous investments which should have been made were not made, the NGC found itself in that difficult position. So let me answer the question very specifically. One is that to the extent that the agreements allowed, NGC has prosecuted, in the case of each of these companies, recoveries. Those recoveries are substantially less than the obligations on the downstream side, which is the petrochemical side. Those agreements were struck 20 years ago, and part of our renegotiation process is to improve the alignment or the realignment between the contracts on the downstream side and the contracts on the upstream side. And you would have heard me say, my words, a route to branch review is required of these agreements going forward, because we have a convergence of downstream and a convergence of upstream in the next period. And what we have to do is that we have to be very careful in the restructuring of these provisions across the entire agreement to ensure that we have a better match between the upstream and the downstream side as we look at all of the terms and conditions, because the architecture in the energy sector has changed dramatically.
I want to ask Mr. Lashley, the Permanent Secretary, a question. In the management letter dated 2014, under issue number 4, dealing with Atlantic LNG trains 1 and 4, I wanted to ask Mr. Lashley, who determines in Trinidad and Tobago the splitting of national gas supplies? The government or the multinational corporations? In other words, 50% of our natural gas, as I understand it, and you can guide me, goes towards the LNG plant, and 50% remains within the national domestic economy. Could you tell this committee whether you are in a position to state who determines the splitting? Is it the government of the Republic of TNT? Is it the multinational corporations? Or is it a combination of both?
Thank you, Chair, and good morning to everyone again. The direction or the allocation of gas, let me just answer you formally. At this time, there is no formal allocation policy. Gas is directed based on the contractual obligations that would be involved in the various arrangements. So, for instance, the upstreamers have contracts, as you just heard from the chairman of the NGC, to supply gas to the NGC, certain volumes and prices. And there are also contractual arrangements to process gas into LNG and sell the LNG on a net-back basis with entities external to Trinidad and Tobago, so that the direction or the allocation of volumes is guided by those contractual obligations. Now, having said that, and having heard from the chairman, you would realize that the decision in terms of direction of gas in a curtailed environment would in large measure be driven by what sort of value on the one hand, but on the other hand, in terms of penalties or provisions in the respective contracts for supplying less than the volumes required.
You see, I raise this question against what is submitted before us. And I want to just indulge the chairman and your good self. It says, and I read, and I quote rather, it was noted that the evaluation of these investments, that is in trains 1 and 4, was done internally. NGC indicated that there was difficulty sourcing information from Atlantic and should have used the waiver in the standard which allowed exemption if sufficient information was unavailable. At the request of the auditors, a third party was hired to do the review. The report was sent to the auditors on April 2nd, 2015, and subsequently was not used by the auditors as a result of insufficient information. So the question I'm asking essentially is that the NGC has investment in train 1 of the train 1 and 4. And for them to make a determination, Mr. Chairman, they need information. And what this is saying is that there's insufficient information available to NGC to make a determination. And in those circumstances, how would NGC know or be in a position to determine whether it is getting a proper return on its investments? Now, my information, and tell me if I'm wrong, I have been advised that in 2012, 2013, the NGC served notice on the Atlantic LNG to get out of this contractual arrangement. And I think somebody mentioned earlier that NGC does its own marketing and trading internationally. And therefore, you're able to get more value for your cargo than if you had gone through another agency within the Atlantic LNG. If that is so, could you tell us whether the NGC is in a better position, given this experience that I've outlined, and given what is taking place with NGC being able to trade and market its own cargo on the international global market? Mr. Chairman?
Chair, I want to respond. I'm going to ask our President and Mr. Lucan to support and to assist. That excerpt that you read is a 2014 excerpt, I think it is. The position has changed markedly. The position has changed markedly. Our view is that when we sit on a board and we are an investee, we are entitled to information as any other shareholder and director. We are doing independent analysis today, sensitivities, pricing, return, to ensure that investments, one, aren't impaired, and two, they provide a level of return that they should. Mark Lucan, our president, sits on the Atlantic board. He is privy to all of the documentation and information as any other director on that board, and we are doing that independent analysis. So the position that obtained with Mr. Maraj in 2014 and Mr. Chedi Singh in 2014 no longer obtains. And that is the kind of work that is important for any company which has an investment in any subsidiary. We also, too, have been very careful to ensure that if an investment is impaired, we bring that to book quickly, and you would have seen that in our Angostura investment. As we work to try to improve the quality of people, the quality of investments that we have. So that's the point on that board. On the other question of there was another element of that question, Chairman, which I've forgotten, and if you could just kindly remind me, please.
No, well, what I was asking is whether the value in terms of returns
Yes.
to NGC
Yes.
is much more lucrative today than it would have been, let's say, before 2012, when you had another agency being charged with the responsibility of marketing and trading your cargo and telling you what returns you can gain from your cargo. But now that you have gotten out of that arrangement and you are now engaging directly in trading and marketing of your LNG cargo, are you getting better returns on it? And what lessons are there to be drawn? Because I am advised that Petrotrin has 3 times the amount of cargoes that you have, and you are doing it on your own, and yet still Petrotrin is tied up with the old marketing, trading arrangement, which from what we are picking up, it doesn't appear that we are getting a reasonably return on our investment through the Atlantic LNG process or project. That is what I was trying to get from you,
Chair,
Mr. Chairman.
You've asked several questions in there, and I will try to distill 1 or 2 of them. One is that there's a contractual obligation with Atlantic LNG and its cargoes, which we cannot break. Those are marketing arrangements which have been put in place, and those contracts are sacrosanct. To the extent that we have cargoes, what we have seen since 2014, repeated in 2015 and 2016, is that the marketing of those cargoes by the NGC has been substantially more profitable. And as the President said, we have used those cargoes to enable us to build a base to market third-party cargoes, which has also been done very profitably. We have to be very careful to manage the risk exposures on those cargoes, and recall to Chairman that we have been marketing LPG, butane for 25 years, and so it allows us to build a commodity trading desk across the group, and which will allow us over time to also take a look at the minister's share of gas as a potential to market that, should the opportunity become available, as well as to work closely with Petrotrin, with whom we have been working to ensure that we deepen capacity and build out our skill set. So the short answer to your question, Chair, is yes, it has proven to be far more profitable as we manage the risk. We're also training people in that area as well. So they're working with major companies. We're sending them out to major companies now so that we have the capacity, the skill set, the bench strength to be able to build out that arm of the business, which will provide a new stream of revenue in addition to our traditional business and therefore help us in terms of volatility of income. So we are very encouraged by what is happening in this area.
Yeah, well, I'm happy that you have been able to respond to that. I just want to refer you to page 13. In terms of your submission, under risk management, there is a table that deals with 10 risks. And I wanted to ask you if you can give us an update. The document that you submitted to us, I want to refer to page 14. And where is yours? They submitted. And where is yours? All right. Under risk management, Mr. Chairman, you would observe that there's a kind of matrix where we dealt with, among other things, shortage of competent staff to operate NGC's critical facilities. Are you with me? Page 8 and 9 of your submission. And you said that the current level is very significant, according to what we have before us, and yet still the residual risk level is minor. There are about 10 risk challenges that you have outlined. Could you tell us what is the current situation, first of all, with risk number 2, risk number 4, risk number 8, and risk number 9. And the rest you can put in writing so that we will have an understanding of the position of the NGC insofar as these risks are concerned. So risk number 2, for example, deals with the shortage of competent staff to operate NGC's critical facilities. The other one deals with, which is risk number 4 rather, the building of houses and projects next to the gas transmission and distribution pipelines. The other one deals with late procurement of critical material, goods, works, and services. The other one, RH, deals with the untimely implementation of recommendations from internal and external auditors, HSE and regulatory authorities, etc., and the take or pay gas sales arrangement. If you could give us a little brief summary of where we are with these matters and give us in writing a response to all that we have on those pages I have identified. So, Mr. Chairman, if you could just brief us, I'll appreciate it very much.
Thank you, Chair, for that. I would say as a caveat that the new strategic plan would include the strategic risk in the organization, which of course it lends itself to issues around failure to supply gas to the downstream, failure to get gas from the upstream. Those kinds of business risk are also being looked at and included in the strategic plan. What you would see here, of course, is more operational type risk, which of course is being revised even up to today with the entire teams across the group. But take some of the issues that have been raised here, the shortage of competent staff to operate NGC's critical facilities, where we have our programs. I would link number R2 with the issue around building transmission, close to transmission lines and so on. And I would say that there is a a focus on asset integrity program. You would have recognized that the national facilities audit would have been conducted across 30 companies in the last year or two. NGC was below the national average, and that is why the management has taken a very strong view on rolling out the asset integrity program in a renewed basis across the company. This is being led from the top of the organization and is structured in teams with a steering committee across the entire group. So first of all, that is the context in which we are looking at our business. The issue of critical skills in the organization, it seems to be more in the area of the commercial, legal type skills that I referred to previously. And that is, of course, areas that we've looked at. Since coming in, I guess in September 2016, we have also raised the profile of safety in the organization. So we now have a senior manager of safety reporting directly to the president. That was not so before. So that is also part of the issue. When it comes to the issue of houses and encroachment of residences close to gas pipelines, we have looked at some of the critical areas in Trinidad and Tobago, and we have actually started a process together with the relevant ministry and town and country planning to divert some of these areas rather than to acquire all the land in some of these areas. So a process of diversion is also being done in some of those critical areas at the moment. When it comes to the issue of untimely implementation of recommendations, that links back to one of the areas that I talked about in the bonus plan, where we said from a governance standpoint, we needed to reduce our risk on the P1 items. So the P1 items are actually being covering in these areas, and we are actually measuring the closeout of those items in all departments. With respect to procurement of critical material, goods, works, and services, we would have also been forming a new position in procurement and projects. That position is close to completion, and that VP projects and procurement should actually be joining in the next within the next month or two. That is a position that will encompass both the engineering and construction services who are requesting the procurement services, and it would also encompass procurement. So as a temporary measure, until we have the VP projects and procurement, we are having those two groups work very closely together. And as I mentioned before, the project management policy rolled out across the group now requires you to have a procurement plan for all your projects as well. So those kinds of issues are going on in the organization. With respect to the take-or-pay, gas sales and purchase volumes, as the chairman would have mentioned, we are quite limited in some of the measures we can resort to, but we are taking those issues forward when it comes to the new negotiations taking place at the moment.
Before I ask Mr. Small to come in, there are three areas I'd like to just clarify. Maybe you can put it in writing, Mr. Chairman. Could you provide us with the returns on our investment in Atlantic LNG trains 1 and 4 for the period 2009 to 2015? That's the first question. The second question, this is directed to the Permanent Secretary in the Ministry of Energy and Energy Industries. The gas sales contract with TNTech and NGC. Maybe Mr. Brooks will answer this as well. What is the current status of that gas sales contract and the royalty gas agreement between the Ministry of, your ministry, Mr. Permanent Secretary, and the National Gas Company? The last information we had is that that agreement has not been finalized. So we'd like to know if that agreement has now been finalized between your ministry and the NGC in terms of the royalty gas arrangement, and what is the current status with the gas sales contract with TNTech. And of course, you put it in writing, the returns on our investment in both trains 1 and 4 between 2009 and 2015. And I'll ask Mr. Small to come in after.
Thank you, Mr. Chair, for ceding the floor once more. Thank you very much. I want to just change gears.
Before you have to answer
Oh, forgive me.
Just a clarification, you require that information in writing?
Well, what I'm saying, if you could give us a summary in a few words, and then you will put it in writing. Yeah, put it in writing after, both for your ministry and NGC, read the royalty gas arrangement, and the TNTech gas sales contract.
Right, well, let me ask Mark to just handle answer on the TNTech contract to give an update with respect to.
Okay, so thank you, Chairman. We recognize that the TNTech contract has not been in place since 1994. So this is an area where NGC has continued to supply gas, of course, for power, and has not been able to receive payments on a regular basis. That has led to arrears, first of all, and it has led to underpayment back to the NGC for gas. So in terms of broad status, the outstanding balance with TNTech is actually, as of the end of February 2017, $516 million US. So that is in the order of 3.5 billion TT dollars. The situation with the arrears there has been a couple of meetings with the management as well as the board of TNTech with the new board and the management. So that has been over the course of the last months. There are solutions being explored with respect to funding arrangements for the arrears. With respect to the specific question of the contract with TNTech, we have a draft ready, so to speak, but we have been awaiting the final pricing arrangements from the upstream suppliers of gas to NGC, and as you recognize, these are negotiations that are in advanced stages. So as soon as we are in a position to table that contract, and we take that should be within the next month or two, that we are able to then put a contract forward to TNTech.
Mr. Lashley, I'll come back to you, but let Mr. Small raise his questions, please.
Thank you very much, Mr. Chairman. Mr. Lokan's response answered one of my follow-up questions. But I just want to change course quickly. And I have a concern again. I am following the trend in the company's accounts, in particular the last 3 years, 2013, 2014, 2015. I've seen where in 2013, the dividend payout was 80% of your profit after tax. In 2014, your dividend payout was 123% of your profit after tax. In 2015, the percentage is a ridiculous number. Your dividend payout was 11 times your profit after tax. Here's the context of my question. In the Carry Chris, who NGC has been ascribed the highest rating since the inception of Carry Chris, in their last report, they downgraded NGC down to, I think, AA+. First time that's ever happened. And one of the concerns they raise is the issue of dividend payments. Similarly, Moody's, when they did the downgrade last year in April, they expressed the same question, the same issue, that they're concerned about the way in which dividends have been paid by the NGC over the past couple of years. So that says the frame for my current question. What could the company help the committee to understand? What is your plan? I understand that dividend payments are not totally within your purview to say yes or no. But I think the company has some ability to say, especially when you have international agencies downgrading you. And part of the reasoning is that they're concerned about the high dividend payments. What is the plan for dividend payments for the year 2016? And to the extent that you've had discussions with your line ministry and, of course, Corporation Seoul, help us to understand what is the plan going forward. Because aligned to that, the company's retained earnings fell from 19 billion in 2013 to 12 billion in 2015, and I don't know what it is now. so that you have a double whammy. Your retained earnings are significantly depleted by over 50%. And then you have the challenge with your rating agencies to which you have bonds, international bond payments due, saying that, listen, they are concerned about the trend of the high dividend payments. In particular, 2015 is relatively speaking, a financial aberration, because you've paid 11 times your profit after tax in dividends. Essentially, you took money from your savings to pay dividends. Could you help us with what is the plan for 2016 in terms of dividend payments, and to the extent that you've had discussions, anything you're able to share with us with your line ministry on this issue?
Thank you, Senator Small. I'm going to ask our Vice President to assist me in this response. The dividend policy between 2007 and 2014, if you take a look at the dividends from 2012 to 2015, the company paid in 2012 $1.2 billion, in 2013 $4.2 billion, in 2014 $3.799 billion, 3.8, and in 2015 $6.8 billion. The profit in 2012 was 4.42 after tax billion. The dividends paid 4.2. In 2013, 3.7 billion in dividends was paid. The profit after tax was 3.8 billion. That is a clear violation of the State Enterprises Manual by the then directors. There were 11 dividend payments in 2013. There were 8 dividend payments. And if you count it, it's 8 dividend payments in 2014. And there was a significant number of payments in 2015, another 11. That surely cannot be the way business is run or conducted, and you're absolutely right. It certainly bit into retained earnings and caused a substantial decline in the asset base of the company. $15.9 billion was paid out in 4 years, which substantially weakens the balance sheet. Just as a comparison, the prior period from 09 to 011, $1.7 billion was paid out. In 2015, Naranja, correct me if I'm wrong, the policy was changed to allow the company to pay up to 90%, is it? 100% of its profit after tax and dividends. No company does that. So we have sought to do 2 things, and I'm going to ask our Vice President to assist. One is that we've tried to improve the earnings stream of the company with the cost measures, the productivity measures, the competitive measures. And we've also tried to bring the dividend policy back to a far more sensible, rational level to allow us to rebuild retained earnings and the balance sheet. So, Naranja, if you could probably just expand a bit, please.
Yes, thanks, Chairman. Just a couple further thoughts. First, with respect to the dividend payments for the years 2013 and 2014, clearly it went above what was approved in the board policies of the company. The dividend policies for the company allowed up to a payment of 50% of your distributable profit. And those numbers clearly indicated that there was a breach in terms of the policy of the company. In terms of the dividend payment in 2015, $6.8 billion, a profit of $605 million, 11 times. And that has put the company under significant pressure to the extent where the cash balances of the company fell to an all-time low. And therefore, it has forced, daily cash management over the last year or so. Now, in terms of dealing with dividend expectations, we have communicated to the Ministry of Finance in terms of what is the dividend outlook for the fiscal year. So we have sought to do that upfront. We have provided a schedule on a quarterly basis what the National Gas Company could pay in terms of dividends to set the expectations upfront, clarify expectations. Yeah.
Yes. Mr. Chairman, to the extent that the company can share any of that information with the committee in writing regarding the expectations, so that we can have a sense of what the plan is going forward, because clearly there was no plan at this point in time in terms of this. So we'd like going forward to understand what is the strategy of the company, at least what you've presented to shareholder. Mr. Chairman, if you permit me, I have one quick follow-up question. on a slightly different issue. And this is the issue dealing with the expenditure on corporate communications and community relations. I go back again. I've spent some time with your accounts, so forgive me. And I look back at your 2012 expenditures, $25 million on community expenses, community relations. By 2015, that number was $209 million. And if you go back to all the years of the history, 25 million in 2012 was high compared to going back further. But to move from 25 million in 2012 to $209 million in community relations, so I partly understand what happened here. My position is going forward, I would like to understand in terms of what happened in 2016, I would like to be informed that your community relations expenditure decreased significantly in 2016 and is going to continue in that trend going forward. But I would like you to enlighten the committee as to, I can't ask you, Mr. Chairman, what happened here because you weren't in office, but at least what is the plan? What happened in 2016 and what is the plan?
Chairman, we are fortunate to have, and thank you, Senator Small, to have our communications manager with us. I will share one or two opening thoughts, and I will ask her and the president and the vice president to assist. In 2011, the company's typical profile in terms of corporate social responsibility was in the order of $20 or $22 million. That was the typical run rate up to 2012. In 2012, it moved to 40. In 2013, it moved to 53 million. In 2014, it moved to 81 million and then to $73 million. $247 million in a 4-year time span between 2012 and 2015. On top of that, you had an additional $370 million spent in roadworks and upgrade of recreational facilities. $370 million in addition to $247 million spent by the then board, chaired by Chan Chedi Singh, and chaired by the president, Mr. Indar Maraj, which is $617 million, $0.6 billion spent in corporate social responsibility on things that had nothing to do with NGC's core business, not aligned to our pipeline or fence line communities, and quite frankly, which served to weaken the balance sheet of the company. In addition, you also had $941 million being spent on the Beetham wastewater project. So in total, $1.558 billion, 1.6 of NGC's money, one could not properly account for that in that period. We have been very careful and diligent prospectively. We have returned the spend to a far more palatable number of $15 million or less, because we have to focus our resources on growing the NGC through acquisition activities, through organic growth, and through investment in our people, and to get a competitive advantage. So the philosophy of the board, embraced by the management, has been very clear. We will refocus the organization. We are not trying to pave every road in Trinidad, or any road, because that is not our core business. We are not trying to get involved in water treatment. That is not our core business. We are in gas-related activity. We are in energy-related activity, and that has been our focus. So that has been the theme, the focus, and the discipline of the organization. It has been embraced by the organization, and we are very grateful for their support. Lisa, I don't know if you want to add anything.
Thank you, Chairman. Thank you, Senator Small. I just want to get a few minutes just to add some context to our NGC CSR portfolio. Historically, of course, you know our portfolio has been aligned with the company's mission and vision and tied closely to our operations. So that is, it is focused on fence line and pipeline communities, as our chairman said, as well as a national company on some specific focus areas, such as youth development, sport, arts and culture, the environment, and education. With regard to this specific period of which we are speaking, the CSR division was managed by another manager. So the huge increases in CSR program expenditure identified previously, of course, went into the paving of roads, which is a non-core area for NGC, a total of 8 roads was paved, as well as construction of pavilions and refurbishment of play parks in areas outside of NGC's pipeline or fence line communities. While we have constructed play parks and pavilions in the past, and I'm sure some members of the committee may be well aware of this, it has always been in support of community engagement programs tied to construction activities. For example, with the construction of the 56-inch SIP pipeline, Cross Island Pipeline, many of the communities through which that pipeline ran, from Guayagayari to Point Fortin, were the recipients of support. As a responsible corporate citizen, we are mandated to leave communities in a better position than we found them. However, these projects were always aligned with our business imperatives and best practice corporate social responsibility. Mr. Chairman, the issue was not only one of spend, but also one of focus. Projects such as road paving and play parks and pavilions were outside of NGC's core business and corporate social remit, which could not be justified. Additionally, in a time of lowest gas prices, declining gas supplies, contracts ending, depleting reserves, and the lowest profit in NGC's history, was the time right for changing NGC's focus. Mr. Chairman, I'm pleased to say that we have refocused our CSR portfolio in alignment with our new strategic plan, spoken of here this morning in great detail. We have maintained our support in key areas of sport, youth development, arts and culture, education, and the preservation of the environment via partnerships with recognized NGOs, institutions, sporting bodies and organizations that practice sound financial reporting and are very careful with the fiduciary duties placed on them. Just a few more minutes, I ask Mr. Chairman to state that while the issue is not only one of spend, as I said before, it was also one of, lack of adherence to sound tender rules, manipulation of tender rules to award multiple contracts to single contractors. It is an issue of lack of due diligence in selecting contractors, and also outsourcing of works to third parties in which NGC has no oversight, all in a very protracted period of 30 months, a very short time to spend $500 million. Mr. Chairman, now, how have we moved on and fixed these challenges? Permit me to say that we have instituted, more stringent processes for the approval of projects, have strengthened our governance of CSR projects via rigorous reporting mechanisms with our partners, demanded more structured reports for closer oversight, and we are conducting annual audits of all our sponsorships and partnerships, which will continue to be guided by MOUs. I don't know if the Chairman has anything else to add. Max.
Yeah. May I just get back to some initial points I had raised? Mr. Permanent Secretary, you want to bring us up to speed with that gas contract?
Yes, Chair,
With the royalty, what is the status of that?
Yeah, just to put it in perspective, it's being handled in an integrated manner with the new gas contracting arrangements that are currently being put in place. So the royalty gas would form one element of the supply being made available to the NGC. So it's a work in progress. Yes, so that the TNTech contract, the royalty gas, the contracts with the upstreamers that are now being negotiated to finality will all come into place at the same time.
Okay. And Mr. Parriat, you want to come back to the students' loans arrangement and just give us seeing that you would have had information by now?
Yes, Chairman. Just to elaborate, there are 3 areas that would cover loans. The majority has been actually through medical advance. Company pays 100% of the cost upfront, part recoverable from the medical insurance, and the balance is recovered from the employee. The second area is in the area of what we call employee-initiated training programs, or EITD, 75% of the tuition fees are subsidized by NGC and recovered by the employee. This covers certificate programs, diplomas, undergrads, and postgraduate study in line with the employee development strategy. And the third area is the computer leases, where 100% of the upfront cost is paid by NGC and recovered from the employee over a 4-year period, right? The high-level numbers that we have is in the order of 3.4 million, 2.6 million. The medical is 1.8, and the computer lease is 594,000, and the employee-initiated training and development program is 135,000.
Is this for the period 2009 to 2015, or is that for 1 year?
So that is current. That is at 31st of December 2016. That's the balance. So if we have to go back in the previous years, we'll have to provide those numbers.
How many employees are covered there? What is the current numbers?
We have on the medical 140 employees, computer leases 79 employees, and the employee-initiated training and development 12 employees.
Could you tell us if you have got approval from the Ministry of Finance for this, or is this a NGC inherited initiative driven by NGC, localized NGC, or is it something that has the corporation soul's knowledge and approval?
So it's not, the understanding is the Ministry of Finance is not required to approve these loans. This is actually approved by the line, the HR, the president, and of course this is governed by NGC policy.
How long that has been in existence? How many years?
Mr. Lucan said even his time it was there when he was president, Chair.
So when the NGC was formed, it was there?
Yes, probably 10 years after that. I can't remember the exact. I know the first one, the first item was really the computer loan, because at that time computers were being introduced, and therefore we wanted to make sure all employees were computer literate, and therefore we provide that facility to employees. So I think the first one was the computer loan, and then was the training program also, which was really for employee betterment in a sense, employee training. But they took advantage that they took the loan and did their own self-training, you might say,
right?
Rather than companies sending them specifically to a school or something like that. So therefore, I think that's how the company really assisted the employees in terms of training opportunities.
So you are saying, Mr. Chairman, that is a policy that does not require the Ministry of Finance's approval or the corporation's role. That is something that is driven by NGC.
That is my understanding, Chairman, but out of an abundance of caution, when I leave here, I will check to ensure that that is in fact the case. That has been our understanding of the practice, and that seems to have been what has taken place.
Okay. All right, well, I would like to ask at this time, I know one of our colleagues have to be excused because she has another commitment, so you can be excused if you wish. And I would ask, Mr. Chairman, before we wrap up, if you can provide us with your perspective on behalf of the company on the way forward as it relates to tightening and giving a positive thrust to the NGC. I know your strategic plan would capture that, but we don't know when that will be approved and when it will arrive here. So we would like you to submit in writing for us some of your immediate recommendations, both in terms of the immediate, the short, medium, and the long, as it relates to transforming, modernizing, advancing this organization called the NGC, which is a flagship state enterprise, and what steps are being taken by your board and management team to realize those objectives. I think if you could put that in writing and submit it to us, we'll appreciate it very much.
We will be more than happy to do that. I hope this morning's conversation has been useful to give the committee some insights as to what we're doing with our flash reporting, with our management reporting, the fact that all of our audits have been completed, the fact that we have tightened our internal audit control processes, we have rationalized our cost, we have rationalized our dividend policy, we are embarking in new areas of business internationally in Ghana, in Cuba, in Venezuela. We have done substantial work in terms of our contractual agreements with Truck, with Juniper, and with various other agreements. Our staff is fully behind us. They support the strategic plan. And so you will see in 2016 an improvement in our result, and we are cautiously optimistic about 2017 and 2018. We feel that we have developed the appropriate strategies to move the organization forward, and by extension, Trinidad and Tobago. So we are cautiously optimistic. We are very focused, and we're also very committed.
Well, let me say on behalf of the committee, we'd like to thank you for coming today, and the Ministry of Energy and Energy Industries, represented by Mr. Lashley, and of course the Investments Division of the Ministry of Finance, and all the officials from the National Gas Company for coming. We reserve the right to invite you again if we need to further our inquiry, but we will do so by writing to you in advance, so at least you'll have enough notice to come before our committee. But thank you very much for coming, and thank you for providing us with the information that you have done. You have, in fact, given a commitment that you would supply us with a lot of information in writing, and I would suggest that if you could do that within the next 10 days, we will appreciate it very much, so that we can proceed with, if we have to prepare a report, we can have the information available so that we can do justice to that report.
We just crave your indulgence. We are in the midst of some very difficult, complex, and sensitive negotiations which have timelines associated with them. So with your leave, if you could give us and the management team a bit more time, because if we slip on those agreements, the consequences could be quite onerous. So if you could be managed to just give us a couple more days so that we're able to complete those things as well as provide you with a proper report.
About what? Oh, would you, is a 2-week period good, or would you prefer within, I would say, 3 weeks? 3 weeks? Okay. Okay. All right. Well, thank you very much. And this meeting is now suspended. Thank you very much. Yeah. Well, that's why suspended. Because yes.
We're doing is telecommunications.
Yeah.